Okay, folks, welcome to Sunday Night Futures Live. We're going to have a new Fed chair, and we're going to talk about the gentleman, who he is, what we should expect from the markets. But first, of course, we're going to begin with the futures action. I hope everybody had a great weekend, and welcome to the new trading week, a new trading month. Let's get to it. Okay, so do I have my audio? Audio good. Let's say hello to folks. Let's let things settle down. I have silver up top, lower left 10-year yield. Lower center, we have the NASDAQ, and lower right volatility index. And I don't know why silver is showing as up. Maybe that's relative to the close. I don't know why that doesn't seem right. Okay, let's say hello to folks. Mr. Pete, welcome. Franklin, welcome. Franklin, you sent me a message earlier today. I'm going to address that on live tonight here. Tim, thank you very much. Hello to you. Hope everybody had a good weekend, and let's get to it. First, let me get a sip of water. I don't know why silver is showing up. It looks down to me, but it could be relative to the close. So let's pull back to the big screen, and that'll show the after hours price action. So yeah, okay, that's why it's showing up. They drifted it up after hours on Friday, and that's how they're calculating it. Makes sense, I guess. So at current, we have silver up relative to the regular hours close on Friday. Let's check in with gold. Gold moving up 2.28% at current. Let's see whether or not we hold these support levels. I think they're going to rally silver and gold. Doesn't mean they're going to hold the rally. I just think that, the beating that they took on Friday, especially silver, was just a magnitude of crazy that we may just get a move up higher. Then they're probably going to fade it back again to either A, do a retest of last week's support, or B, they're going to take out that support level. What does it do? I don't know. We'll watch it, and more than likely at some point in time, we're going to reshort the mining stocks, but only if they rally. We shorted the mining stocks on Thursday using DUST, D-U-S-T. I'll show you that. So we kind of knew that the sell-off was going to come fairly soon. So we bought it. Let's get off the phone. Okay. So it started to move up here on Thursday, and we bought it near the close, and then it just took off. We booked a 24% profit, and we just closed it out on Friday in anticipation of a rally on the mining stocks, rally on silver, rally on gold, but a probable fade of that rally at some point in time this coming week. So checking back in, silver now up 4%. Really weird chart today. This does not look up 4%. I don't know how to explain it. But okay. Gold. Uh, Having trouble. Well, it did close above the support level, but struggling here. So I think they will find a footing and they'll probably rally overnight. Let's take a look at the dollar, which caught a bid last week and it's opening up now. Dollar is very, very strong. Very strong. So this could be a problem for silver and gold overnight, in particular the mining stocks. They generally trade inversely of the US dollar. I want to check in with euro yen. In particular, I want to focus on the yen. Let's begin there. Yen gapping down in a very, very big way today. Down 0.60%. Whereas the euro is gapping low. Well, it didn't gap lower, but it's moving lower now by 0.24%. So the dollar, very, very strong. That's going to cause a little bit of problem for certain commodity names, not all, but certain. Let's take a look at equities. Beginning with the E-minis, it appears as though they are gapping lower, leaning into the Bollinger Bands. We're probably going to get a bit of a rally here. What do I have up? 2 or 3 standard? I have 3 standard deviation Bollinger Bands up here. So I think we're going to rally here in a few minutes, if not now, off of these Bollinger Bands. Checking in with the NQ. NQ now down by 0.84%. Lots of pressure here. Let's check in with small caps. Gapping down 0.56%. Mid caps down 0.37%, holding up better. So small caps not getting hit as hard. Let's check in with crypto. Bitcoin. Oh my God. I would not want to be Michael Saylor this evening. Wow. Bitcoin down $8,000 the coin. Wow. Michael Saylor is the CEO of MicroStrategies and is highly levered to Bitcoin. And this is bad. Let's check in with XRP. Wow. Down 10.2%. Wow. Bloodbath. But we continue the dollar cost average in every single Monday. Every Monday, little nibble, nibble, nibble. What else do we want to take a look at here? Let's go to, I want to go to a weekly chart. And I want to take a look at Other commodities out there. Live cattle. Holding support. This may go up. We may see new highs on live cattle. Not good. Corn. Trying to break out. Gold broke support. Let's check back in with gold really quick. Just wrap up here. Corn struggling to break out. GC. We'll go to a 15-minute chart now. Wow, this is not good. So we sold about a third of our gold position physical. About, I think today is 9 days ago. So it's now trading down below where we sold it. Let's set up an alert here. See if we bounce back. If we bounce back here, we're going to see a moonshot higher. But I think we need to get above this level right here at 48.86 the ounce on gold. At or above. All right, back to weekly chart, wrapping up commodities, ag. I feel like I'm missing something. We went through these way too quick. ZW, wheat. Wheat looking really, really good here. At resistance, but 4 straight weeks of back-to-back up weeks. Soybeans, not doing much. Avoid. Did we cover everything? Why do I feel like I missed something? What are yields doing? Yields are down at current. NASDAQ honing in on support. Volatility up by 6.28%. I get the vibe I'm missing something. Oh, energy. I knew I was missing something. Light sweet crude down 2.5% here at the open. This is a weekly chart. We're gapping lower. I think that this is a screaming buy right now. Right now. Why? We had a massive breakout last week above weekly resistance. Now we're doing a check back to support. This is textbook stuff here. I think that if we get follow through, I would nibble here. I would add more on a follow through and add more on a new weekly higher high. May not happen this week, but looking really, really good here, even though we're opening down. We don't want to take a look. We're not buying the commodity. We're buying the setup, right? So the setup here is all it is the market right now is telling us we're testing this. We're testing whether or not this breakout here last week is for real. Maybe it was a short squeeze, right? And it's not for real. It's not institutional demand for oil. Well, the market's going to tell us this week as to whether or not this breakout is for real, because now it's retesting the breakout point, with the theory being what was resistance should now be support if, in fact, this was a healthy breakout. I think that it is. And we're going to go to a chart in a little while, the CRB Commodity Index, which kind of validates my thesis that, in all probability, oil is going to move up higher. Let's check in with natural gas, which had a very good week last week. Very volatile, but that's natural gas in general. Wow. Oh my God. Natural gas gapping down 16%. Even for natural gas, that's crazy. Holy cow. Holy cow. Whoa. I got to check back in with equities. All right, so we have the NASDAQ trying to find its footing here. I don't think this is going to hold. I think we're going to press lower before we get any type of sizable rally. And I think where we're going to go to is right down here, this line in purple. At least on the NQ, that is at 25,357. We'll probably see that before we sign off tonight. Let's go back to the E-minis. E-minis now down a half percentage point. Off the lows of the session. We have our alerts set. Let's get curious just in case we take out the highs. We'll set up an alert there as well. Okay. That's the opening futures action. Lots of volatility. Very good. It's going to be a very, very interesting week. Okay. Let's go to the events that will be unfolding this coming week. Where is my stuff? I have so many windows open. There we go. Okay. Let's begin with economic data coming out this week. Monday, S&P 500 manufacturing PMI, Purchasing Managers Index. That comes out Tuesday. Well, ISM manufacturing comes out. We're going to go to a chart in a moment about manufacturing. I think that we're probably going to beat on this number. So I'll reference this yet again in a short while when we go over the chart. Tuesday, job openings, which will probably contract with all the layoffs going on out there. S&P services PMI. It's jobs week. We're going to get jobs coming out of ADP on Wednesday. Thursday, initial jobless claims. We get that every week. And on Friday, we get the Pimp Mac Daddy, of all economic reports, non-farm payrolls. That should be a real interesting one. We saw huge layoffs out of UPS, out of Amazon, and more. So AI is beginning to AI and automation is taking a grip on the workforce, no doubt about it. Let's take a look at the Shiller PE ratio. We closed out the week last week with a multiple on the Shiller at 40.46. Very, very frothy. The Buffett indicator. The market remains strongly overvalued. How overvalued, Bob? Glad you asked. This overvalued. We remain greater than 2 standard deviations above the norm. This is one of the primary reasons as to why we are short this market. So if you have any doubt, or if you're questioning why we're short, look no further than this chart here. And as far as PE multiples on a forward-looking basis, the forward 12-month PE ratio. Remember, these are estimates. The forward 12-month PE ratio is 22.2, which is above the 5-year average of 20 and above the 10-year average of 18.7. So on a forward-looking basis, equities are frothy. On a rearview mirror basis, meaning reported earnings, very, very expensive. Very expensive. So this week, we're going to have a lot of earnings coming out, and it's going to be a hodgepodge of all different sectors: energy, biotech, entertainment, finance. So let's get to it. Tomorrow, pre-market, Disney, energy play, Hess. After the bell, Palantir. Palantir getting walloped lately. Teradyne, Simon Properties, Rambus, very, very volatile. Chip Designer. Tuesday, PayPal before the open. PepsiCo, Consumer Staples. Consumer Staples are in fuego right now. We get two drug companies, Merck, and then you got the drug / poison company, Pfizer, and ADM, Archer Daniels Midland. Semis after the bell on Tuesday, AMD. Then you get Supermicro. That's one of the largest customers of NVIDIA. Chipotle reports, Enphase, Amgen. Lots of data coming out this week. Uber before the bell on Wednesday. Eli Lilly, Johnson Controls, CME Group. UBS reports before the bell on Wednesday. Alphabet after the close on Wednesday. ARM, Qualcomm. So watch the semis this week. Thursday, Energy Day, ConocoPhillips, Shell, Bristol Myers. After the close, Amazon on Thursday. Affirm. That's one of those buy now, pay never companies. That should be interesting. Friday, Biogen, Under Armour, Toyota. That's the week to be. All right, so a little bit of headlines over the weekend. First, before we move on, let's say hello to folks that joined in. Lee Cable, welcome. Sean, hello to you. My silver says down 4% to 81. Okay, that makes more sense to me. TZ Burton, hi Bob. Everyone, Bitcoin is on the slide today. Yes, sir. You are so accurate. George, welcome. How's the weather up in Quebec? If it's this cold here in New York, man, I can only imagine how cold it is up there. Yeah, we can look at copper. That's a good one. I think I'm testing my symbols right now. I think that's HQ. HQ? No, you're wrong. Q. All right, forget it. QC. I knew there was a Q. Wow. Copper getting walloped, down 2.26%. Here's the weekly view. Looks like a rounding top on copper. I would avoid this right now. This is clearly saying profit taking above. All those topping tails on top of the candlesticks, call them wicks, call them shadows, call them what you will. All it implies is that you should probably book some profits, hedge, whatever you need to do. All right. All right, so over the weekend we had a bank that blew up, was taken over by the FDIC. Chicago Banks fails, becoming first in nation to go under in 2026. Metropolitan Capital Bank and Trust. Okay, So for context here, the Twitter sphere is blowing up. The banks are going under, yada, yada, yada. Let's context matters. And it only has 261 million in assets. It's not a big player at all. So, it's a drop in the bucket in terms of banking. The concern that I would have is that we have one cockroach, you probably have another. Rarely do these just come one at a time. So just something to watch out for. And the regional banks, I'll be honest with you, this is a bullish chart. This is clearly a stock that would have been, were it public, I don't know if it's public or not, would have been in the regional bank index. And this is a pretty healthy chart. So I don't see signs of a lot of concern here from the regional banks. So context matters. We're not here to do gloom and doom, but it is a newsworthy report, something to keep an eye on, but we touched upon it. Now we move on. Okay, off of Kalshi, who will the next Fed chair be? Kevin Warsh. Never heard of him before Friday. Never heard of him. Doesn't give any speeches that I've seen. But here he is. I thought you'd find this interesting. Did I do to share my audio? Let me make sure that I did. Stop sharing. Now we're going to reshare audio on. I know that would have gone bad. Okay, good. So I'm going to give you a clip from
economy.
This gentleman.
In the room, it hasn't been that big of a deal. We know it when we go to the grocery store, but we also own financial assets. Maybe we own some Bitcoin. 52% of our fellow Americans own no financial assets. They don't have equity in their house. They don't have an account at Schwab. They don't have an account at Coinbase. They're living off their W-2 income. And this surge in prices have destroyed them. Yeah. It's the most regressive tax any government could ever come up with. Imagine if we had a central bank that had been deadly focused on that. I think we wouldn't have taken a divided country and made it more divided. When we have a big balance sheet, we're asking for the inflation that came. And as a final point, my own judgment is the story that I hear from many of my peers. Well, the inflation, well, that's not really the central bank's fault. That's because of Putin and the pandemic. Nonsense. A change in prices happens in a market economy because of shocks in the world. Changes in prices happen every day. That's not what inflation is. Inflation is when that change in prices become embedded. It's second and third order effects. And that's what's been the biggest harm to the country. My recommendation is a smaller balance sheet, takes the Fed back to a more manageable size, a more serious job. And interestingly, if you can have a smaller balance sheet, you can have lower interest rates. Back to you.
How much smaller?
So when I joined the Fed balance sheet.
All right, he gets long-winded here, but it comes down to he wants to see the Fed's balance sheet drop down by a couple of $1 trillion. So we know that up until December 1, the Federal Reserve had been decreasing their balance sheet since, let's call it, mid to late 2022. That video, that speech he just gave was given back in 2024. So you can see that all the debt that has come off of the balance sheet. The question is it enough for him? And the vibe I get is no. I think he wants to get it lower. So I think what you're seeing here in the markets is a pricing adjustment to the probable incoming new Fed chair, and the fact that he is not going to be as accommodative. Now, the problem I have with that is this. It's very, very simple, very, very basic. If you have President Trump, who does not like Jay Powell because he would not cut interest rates, then why would he like this gentleman if he is looking to decrease the size of the Fed's balance sheet? Now, he's saying that you can have lower interest rates by doing that, but I'm not sure how that works. And granted, he's far smarter than me, But the fact of the matter is that when you roll off debt, if you reduce the size of the Federal Reserve's balance sheet, meaning sell treasuries into the open market, well, that creates more supply. And if there's too much supply and there's not enough demand to absorb it, well, then the government has to make it more appetizing for the markets. Ergo, you need to pay a higher yield to get that appetite for that additional supply. I don't know how he works around that. And again, he's far smarter than me. So that's my dilemma, is that it's kind of like with this nomination, it doesn't make sense. It seems like President Trump is taking a round peg and trying to fit it into a square hole. And he's already got that. He's already got that with Powell. So I think it's interesting that we're going back to a time where good news is good news for the stock market, right? When you hear bad news now, stocks go up. It's so counterintuitive. The reason why they go up is that if there's bad news, non-farm payrolls disappoint, you have manufacturing decrease, whatever, the stock market goes up on the bad news. Why is that? Well, it's because it's an expectation that the Federal Reserve is going to cut rates. It's the Federal Reserve acting as the rudder for the overall economy. That wasn't always so. At one point in time, before the Federal Reserve, it was Treasury that did that job. That's their job, not the Federal Reserve's, historically. So this is kind of perplexing to me. And the other thing that causes me a little bit of, I don't know, curiosity, a really severe curiosity, is that, and by the way, during that video play, the E-minis and the NASDAQ both broke, and we just had another break. Let's check back in. Lots of action in the futures action tonight. And then we're going to go to the Y. I think he's going to have more problems than maybe what he's signed up for. We're getting a little bit of a bounce here on the E-minis. NQ, probably the same. They probably hit that support level I referenced. Yeah, we're getting a little bit of a bounce. Yeah, we came right down here, and the buyers moved in. Okay. So the reason why he's going to have a little bit of a problem with cutting rates automatically is that when you take a look at certain charts, the Dow Transports were up 5.43% last month. This is not an indication of weakness. The Dow Transports closed at all-time highs. If you were showing me a chart of the Dow Transports that were rolling over a failed breakout, closing down on the month, and breaking support levels, then I'm like, okay, you know what? There's probably something wrong in the economy that's going to give them wiggle room to cut rates. And then you take a look at other indicators. You know, we're just being curious here. The Dow Jones Mining Index. No indication here of weakness in the economy. Do I have manufacturing? I don't have it up here. I don't want to waste people's time. Also, you have the Dow Jones U.S. Containers and Packaging Index, which had been weak, but we've had 3 consecutive up months. Now, this is not breaking out yet, but it looks encouraging. The other reason why he's going to have a hard time with cutting rates is that this chart here is of the CRB commodity index, basically a basket of commodities. And it tells you whether or not commodities are getting more expensive, which is inflation, or getting less expensive, which is disinflation or deflation. And this chart clearly shows that we are seeing a move up higher in commodity prices, which in and of itself is inflationary. This is being driven by gold, silver, which the ordinary person doesn't need to buy unless they're going to buy jewelry or invest. But what else is driving this is copper, which was higher. Down now. We had oil up, natural gas up, big moves up in natural gas last month, now moving lower. So as long as this continues up, I have to question how he's going to be able to cut rates like the president wants without sparking inflation. Now, the two areas that I'll be looking at very, very closely this coming week, especially since we're short, is that I'm not a big believer, and he apparently is not a big believer, and I have to reevaluate our strategy. I do not want to remain short any greater than April 1, if that long at all. He is not a fan of quantitative easing. You heard him say it himself. He wants a reduced balance sheet. So what is quantitative easing? Well, it's what the billionaires love it. Millionaires love it because they have assets and they go up. That's when the Federal Reserve builds up the balance sheet, moves it up higher, increases asset values, increases inflation. He doesn't want that. He wants to reduce the size. So my thesis has been you get a lower interest rate friendly Fed chairman that comes in May. He cuts rates and probably ramps up the buying of longer term debt, which runs counter to everything that this guy has stated on the stage in the recent past. So I'm very, very curious about why he was chosen, what he committed to do, and how he's going to do it and stay in the good graces of the president. Very curious pick. Very curious pick. I like what he has to say, but I just don't know how it's going to blend with the president. So the two charts that we're going to be watching here, the market is all about liquidity. What liquidity is going to help drive the market up higher? Well, we have high yield debt, which had its first down week in several weeks last week. And what happened, you saw a little bit of weakness in the overall equity markets. The high yield debt market, HYG or GANK, whatever you want to type in here, that was down as well last week. These high yield bonds, when they move lower, equities usually tend to follow. So we'll be watching this. Also, the 10-year yield. If the 10-year yield begins to break out, that's the bond market saying either A, we're not going to allow you to be as dovish as maybe you've committed to do to the president, or B, they're going to price in what his historical attitude has been on interest rates, and that is, he's pretty hawkish. He's pretty hawkish. So the guy loves crypto. He's very heavy into Bitcoin, Ethereum. I've done quite a bit of research on him. Everything points to the fact that he's a bit of a hawk, and I just don't know how this ends well for equities. I think it's best to remain short right now. Let's go to, just want to talk about Oracle for a moment. Oracle is now trading 25% below its 200-day moving average. I want to check this chart out because you're seeing a ton of weakness here in Microsoft, in Oracle, and what do they have in common? AI. So I'm wondering whether or not we're seeing a convergence of names that have taken on too much debt and they're not getting that much reward out of their investment. AI could be the game changer for all of us, but it may take quite a bit of time to get a return on that investment. So let's check out that chart up first. Let's begin Oracle. a bloodbath. It looks like it wants to move lower. We're going to be using Trend Spider, folks. What may happen here, and here's a good trade, is that we may get a rally here. It's going to be a brand new month. If they gap this up, I suspect that they're going to rally it up to around 188.63, maybe 186.50 intra-month. Doesn't mean it's going to close there. It just means that they're going to probably try to tag this prior support level. The question is, does it fade? In all probability, judging by this chart, there's a good chance that it does. Let's see whether or not we have any support levels below. Let's go to quarterly support levels. Yeah, we do. Folks, by the way, we're using Trend Spider, automated technical analysis. And with the new site, it's going to be given away free to all membership levels. So, and if you're not ready to join, I understand that. Yeah, the site is not up yet. It should be up. I don't even want to say the date. It's probably going to be up around the 16th, which is a Monday, which I'm not happy about. I wanted it launched on a Friday, but anyway, it's coming. And we're going to have support here on Oracle. Fat fingers. Let's keep this active for a couple of weeks. So Oracle looking interesting as a swing trade, not as an investment. Weekly view. Okay, so on the weekly chart, we tagged a couple of support levels last week, and we bounced off of them. Daily view. Daily view, we broke support. I think we're in a zone where we can entertain putting on a long trade, especially if we got down here to around, let's call it 156. Where did we close last week? We closed at 164.58 on Oracle. There have to be a bunch of shorts in this name to provide us a short covering rally. RSI is still not oversold yet. RSI is at about 27.94. It can go lower. So Oracle on our watch list. Another alert fire off there. Let's see what's going on. All right, so we're seeing some strength now in the NASDAQ and in the ES. NASDAQ down only 0.49%. Let's check in with the ES. ES is down only. This is the S&P 500 down a quarter percentage point. So as predicted, that support level on the NASDAQ anyway held and buyers moved in. No great shock. Okay, that's Oracle. All right, so one of our members, Franklin, asked me a question. Bob, in your recent analysis of gold and silver, you mentioned potential buying opportunities once prices pull back. If you are still holding positions, which I am still holding positions, if you were still holding positions, would you consider selling covered calls, reducing position, or using protective puts as your preferred strategy? I think it's too late to use protective puts. I think the time to use protective puts was late last week when you had RSI screaming up higher. I think that I would sell calls on those positions if, in fact, what we get, let's bring up if we get, this is a leveraged product that we still have, not as much as we used to. We've been scaling out on the rally up higher on the gold mining stocks and on silver. We owned AGQ. We still have a third of our initial position. We've reduced that size because it was just so overbought. Now we can reevaluate and look to get back in to our original size. So to your question, if we were able to on NUGT or GDXJ, whatever you're trading, GDX, just take your crayon out, draw the lower band of support. If we rally back up to what was support, should now act as resistance. And even if it doesn't, even let's say we rally back, consolidate sideways, and then move up higher. If you sell calls here, that's when I would sell calls or lighten up and just get smaller on the position. I still wouldn't sell my entire position. I'd still want exposure here because I think longer term these names are going to do well, except of course if the new Fed chair is not as dovish as he has the president believing at current. So that's when I would sell calls. I would not sell calls right now. The reason is that the premiums you're going to get are junk. Nobody wants the calls right now after the damage that was done last week. So avoid doing that strategy. I'd rather just sit, ride out the correction if I want to remain long rather than sell calls. I would wait for a counter trend rally, let some premium get built back into the call options, and let the shares move up higher and sell into resistance. Sell calls into resistance. And then at that point in time, if you wanted to put on a protective put position, you can use the calls to help finance the protective puts, if that makes sense. So very good question. So I wanted to address it. And the preferred strategy for me right now would be definitely not buying puts. Too much damage has been done here. The puts are too expensive, way too expensive. And I would rather wait for the counter trend rally, sell calls. I wouldn't buy puts because I think longer term they're still going to go up. And I would rather just generate cash flow off of the call premium. But I would not act on Monday. Definitely not. I wouldn't buy puts. I wouldn't sell calls. All right. Let's see what chart requests we have. All right. We got a bunch tonight. All right. Tim, looking for SoundHound. Very beaten up stock. Very good company. But it's going lower. This is a weekly chart. They may rally this again, very similar to Oracle's monthly chart. They may rally this up and into resistance, maybe up to 10.50 per share, 10.40 per share. Then you got to see whether or not it rolls over. But if it gaps lower tomorrow or fades off the highs of the week and puts in new weekly lower lows, we're coming down here, down to $6.55. So this is a stock that closed at $8.46 on a percentage basis. That's a pretty big drop from where we closed on Friday. I'm not a buyer here. Excuse me, I'm not a buyer here. Would I short it? Probably not. It's already leaning into the Bollinger Bands. So low sevens, high sixes, then I would be attracted to SoundHound. IREN. Weekly view first up. So the first thing that jumps out at me here is that you had this big rip up higher, and then we pulled back, nice orderly support, and we had a nice rally, as you're well aware. I know you follow the stock all the time. But last week we had a bearish key reversal bar. We did hold one support level. If we hold this for a couple of weeks, I would say, okay, it's just consolidating. But if we put in new weekly lower lows, I would avoid, perhaps lighten up, because, excuse me, we're probably going down to 49.50 per share. And if that fails, we can head all the way down to $42 per share. So I would watch for a new weekly lower low. If you have Trend Spider, all I would do is create an alert, break through that support level. And we don't want any sensitivity. If it breaks through, then you know not to add. You got to wait for strength to add, and you may want to consider taking a defensive posture because the stock could quite possibly move lower. Dahlia, Microsoft. So Microsoft, their cloud business did not perform up to expectations. And this chart tells us that Microsoft wants to go lower. It is now in a confirmation breakdown. Here's the upper band of your declining downtrend channel. Here is your lower band. And we tapped it last week. We bounced off of it. Am I a buyer here? No, not with this kind of volume. Big down volume. This is institutional distribution. I don't step in front of these guys. Let's go daily view. Daily view, again, these are the automated trend lines, folks. I didn't, well, that one I drew. We broke through a bunch of support levels last week. Held another. So might we get a counter trend move here? Yeah, I wouldn't rule it out, but I think they're going to fade it. I think they're going to move it lower, especially if they believe that the new Fed chair is not going to be as accommodative as what they hoped. Although the odds of a June cut did increase. We didn't go over that. So we have no expectations of a rate cut through April. But June is the month the new Fed chair comes in. This has increased dramatically now. The last I looked, so last week, we were at 60% probability of a cut. This morning, this was up to 61. Now it's at 67.6 probability of a cut. Interesting. Back to our regular scheduled programming. So Microsoft, you may get a counter trend rally here. They're probably going to fade that rally. Be careful. TM, Toyota. They report next week, next Friday, I believe. Very healthy chart. Very healthy chart. Higher lows, everything you'd want to see. To me, what we're looking at here is a bull flag setup that we're getting ready to break out of. The only caveat I have for you, and this is the value of the automated trend lines, is that you have resistance, which we hit the week of January the 12th, immediately above at 233.93. Now, volume last week was very good. So they tried to take it down. They reversed it to close up. That's very good. So when we do hit this resistance level, again, You're going to need this type of volume. You're going to need rocket fuel because you have all these buyers back here, which held through the sell-off. They want their money back, right? So you got to fight through them. I don't think it's too daunting of a task. Let's go daily chart. Daily chart looks good. It's consolidating. Volume a little bit high. I think this is a buy. I'm not a big fan at all about buying in front of earnings, but Toyota, GM, these are more predictable names. So I like the chart. You decide whether or not you want to buy it in advance of earnings. I personally wouldn't do it. I'm not that brave. Trust me. Too much risk. It looks good. I think it goes up. Bullish Toyota. ISPR. For all the strength in this chart, it remains in a downtrend channel. Right, so here's your upper band here in purple, but we hit that lower band in blue, and we bounced very, very nicely. And in fact, we were in a very tight wedge formation. We broke out the week of November the 17th. Nice consolidation, continuation move up higher. I think it goes up. I think it's going to move up higher. We're going to have resistance at $4.55, then 505, then 558. It's looking good. Yeah. What is required here to get through this resistance level is volume. You're seeing that volume. I think that you can nibble here and add more to your position as you close above these resistance levels above. Once you get above 548, I think it goes a lot higher. So constructive chart, developing nicely. Let's go to the daily view. Really nice breakout on the 29th. We got follow through on the 30th. If the market gives you the opportunity to buy the retest down here at 335, I would take that opportunity. I would be a buyer. I wouldn't go crazy. I would initiate a position, nibble a little bit, scratch the itch, if you will, and then on a continuation move up higher, add more to your trade. Netflix for Franklin. RSI on Netflix is 20.71. Now, we broke weekly support last week. That's a problem. Weak stocks tend to get weaker. Now, what I would like to do here is I would like to open up a strangle. Strangle. I always confuse straddle and strangle. Simultaneously sell a deep out of the money call and sell a deep out of the money put. And I would try to keep that put price down below 69.56. If you want the stock, put it at, I think these have dollar increments. So, put it at $67 per share, whatever floats your boat, and have it assigned to you. And, you get paid the premium. So you get an additional discount. I'm not a buyer here. It's not beaten up yet enough for me. The path of least resistance remains down, and volume it's still under clear distribution. So if you're looking for a price point at which to buy, let's go to the daily chart for a moment. Nothing happening there. I have to say that I would wait until $69 a share. That's a long ways away, but that's what I would do. I would sell premium here, wait out the storm, let the stock price come to you, and then you can get long of it down there. I'm not a buyer of Netflix right now. Because even if RSI goes down below 20, I still need to wait for a support level at which to buy it. And we don't have one until we get down into, at 70 or into the mid 60s. So I would wait on Netflix. URA for Sean. Potential double top here. Overshoot double top. Let's get rid of I need this one. We're going to keep these. These are pretty good. Bearish reversal bar. If you own it, I don't know if it's optionable or not. This is uranium. I would sell calls here. Clear candidate to sell calls. But keep in mind, you sell calls on commodities. Commodities, when they go really, really hard. And me personally, were I long of uranium here, I would have to make my position a lot smaller. This is telling me that we may have a top. The only thing that would prevent me from reducing size here is if they gap it up tomorrow. But if they put in a new weekly lower low, I would definitely lighten up here on this trade. Daily view. Yeah, lots of pressure here. Volume picking up. RSI overshot the prior high. Now it's broken down. Volume very heavy. It's under distribution. So, we closed at support. Again, new weekly lower low would have me out. And unless, of course, we trade sideways and consolidate here, I would not be a buyer yet. I would. It's a watch at best. It's a reduce most likely. Last one up for the evening is lit. Lithium. It's definitely not a buy at all. It's a bearish reversal bar. To me, this type of price action is indicative of topping action. And we closed right at the lower band of rising support. So new weekly lower low, that's a breakdown. And you're not going to see support until here, 62.65 per share. So me personally, I would lock in gains here, and because it's the market telling you, hey, listen, market sends you signals. That's a signal. Look at the volume, very heavy volume. I would make those profits real and reevaluate the position at a support level, either at 63 or 58, 59 bucks a share. Let's go to comments. We saw that one. Oh, yeah, TZ Burton. Thank you. Like, subscribe. Thank you very much, TZ. Michael, hello. The lovely Jody, welcome. Yes, definitely. Michael Anthony. Hi, Bob. Have you looked at TIGR as a brokerage that Citi upgraded 1750? No, I have not. I'm not familiar with them. About how much lower can the markets go? How much lower can the markets go that should we even be in the markets? We're short. I'm short the market. I'm short the Qs. So my attitude is that I think the path of least resistance is right now under a lot of pressure. It still remains up. It's only a few days ago we made all-time highs on even the Qs. But the valuations, I'm not understanding why we're up here. And I think that yields need to go up higher, and they have been going up higher. So I don't think that's good for the markets. I think it's going to put pressure on them. So down below, I have a link to a QQQ support level guide. It shows you where the support levels are on the triple Qs. It's free, so check that out. How does Iran it has a lot of effect on geopolitical risk. So this Iranian thing has been around for a while, and you've seen the dollar be able to go up with gold going up. That only happens when there's geopolitical risk. And granted, there's more demand for gold right now than there has been the past few years by the central banksters in particular. But once that geopolitical risk comes off, the gold and the dollar revert back to that inverse correlation. And when you have the dollar acting as strong as it is, even tonight, that usually doesn't bode well for the precious metal names, especially since they've been beaten up of late. And they broke last week. So I would pay more attention to the dollar and that inverse correlation with gold. Yeah, he's not a dove. Agreed. Yeah, I got to check out George's commentary. I'm sure it's more thought out than mine is. There's an article out last week on AI and the ability to write code on the fly. I hear Claude is very, very good at that. This might be an indicator towards those companies with Oracle. Well, if anything, it should benefit Oracle, you would think. But I think Oracle is struggling under debt right now. You're welcome. Anytime, Franklin. My pleasure. Tim, very welcome. Sean, very welcome. We went over copper earlier. We'll take a quick look for you. FCX. Topping action. Copper's coming under pressure, so you may get a bit of a retracement here. I would eyeball, if you put in a new weekly low or low, watch for $50 a share. Low 50s on FCX. Longer term, bullish. And that's what I would do. If you're long, you don't want to sell, think about selling covered calls. Miser, you're very welcome. All right, everyone. Everybody have an awesome and profitable trading week. Don't forget about TrendSpider, the discount codes below. Link below on YouTube, link above on Twitter and Facebook. Have a great night all. Take care. Be well.